on the demand side, and then on the capital market, what would you really need, and how do you build the demand and for your clients?
So on the demand side, what we are seeing is that, there's big push towards embedded finance happening across the globe, which is good because even in country like India, GST data and everything is seamless. Like the digital stack in India is so much better than US or any other markets. I think the key thing is that's extremely important. That's a building block. Then your payment systems and your overall, even like the tax filing systems, you can actually harness a lot of data from that now. So on the demand side, and with the advent of AI, it's going to make it even cheaper, better, but also a lot more competitive also. So my take on that is, on the demand side, it can be taken care of. Capital market side, I hear, Ananta, that yes, US has the biggest advantage because dollar is the reserve currency of the world. That plays a huge role, actually. Having said that, I think there are now new channels. Like one thing I've discussed with IRDAI in the past has been that, and it's applicable for India and some other markets, because India has a very well-developed insurance sector, 100% FDI now there. Instead of just keeping everything solvency based, let's make it credit rated based. A certain percentage of your insurance premium money can get deployed towards credit rated based kind of instruments also. That will open up a lot of market. We have seen that in US, why Warren Buffett is the savviest investor, and now every private credit player, private credit is a dirty word these days, but every private credit player went and acquired insurance companies after the great financial crisis. Was that we have seen that, that's a permanent capital, low cost capital with increasing longevity. There is a lot of opportunity in that space. So same thing is there for the developing markets. It's going to take more time. It's not as easy as we can do things in US, because here everybody wants to invest also. That's not the case in most of the emerging markets, actually. But I think with advent of AI, one big risk that countries like India and other emerging markets now run is that we had a great 40-year runs with the globalization. The SME trade really increased and everything. With AI coming in, a lot of that competitiveness will get consolidated very quickly. So emerging markets will have to move faster and faster now to take care of it, because countries like US or China, US is like so much over investment is happening in AI, which is good and bad. Creative destruction is going to happen, but that's going to increase the competitiveness of the economy even further. And for a country like India, which generated hundreds of millions of jobs in IT services and gig economy, that is partly at risk right now. So how do you compensate for that? How do you do things which can increase the competitiveness of the SMEs? Because in US, we are starting to see that over next 2 to 3 years, the SMEs are becoming extremely competitive. There's a lot of things that they used to outsource, which they don't need to do anymore. Not only the big companies, but even the SMEs. And then, and that's going to be even adding more job crunch for the emerging markets, actually. That cost arbitrage piece is going to get diminished. So I think that's why developing capital markets, thinking more innovatively, taking some calculated risks, being a more entrepreneurial kind of a mindset becomes even more and more important for emerging markets, in that sense.